Good morning, everybody. Welcome to Coffee and Crypto. It is going to be a good day today. It is Fed Day. We're getting reports from FOMC today at 2 p.m. Eastern Standard Time. And we're going to talk about all of what you need to know going into that. Of course, we're having Caleb Franzen on because it's Caleb Franzen Wednesday. But before we even do that, there's some reports coming out from Tether we got to cover. We also see that Nasdaq potentially is looking at actually offering cryptocurrency there as well. So could that bring a lot of institutions into the space? Make sure you don't go anywhere as we cover all of those stories and a whole lot more. But before we actually go there, make sure to smash the like button, subscribe to the channel. It's going to be a great day. I am joined by two fantastic co-hosts. I got TShroom over here, just back from his trucking journey. How'd that go? What were you delivering this time?
Titers.
Titers. Pod titers?
Just titers.
All right, good. I also got, I got characters today. I got my trucker friend over here to my right. I got my Amish friend over here to my left, Smay, running our tech today, which is kind of weird that the Amish guy would be running tech.
Guten Tag. I grew the potatoes.
Pennsylvania Dutch. I like it.
Yeah, although...
We apologize to all of our Amish fans watching, just so you know. There's probably a lot of them.
There's a soundbite for that one. There we go. Well, after.
Yeah, we don't mean any offense.
No offense given.
Because they were definitely watching. Get it?
Yeah. You got it. That was what the laugh track was for.
Oh, okay, good.
It is, okay, we're going to keep going on. It's a beautiful day today. I love seeing all of these people in chat. You know, here's the question. I've seen people comment already. If you were on my Twitter, you don't follow me already on Twitter, at Tims_TA, you better go do it. I asked the question this morning, last day, what do you guys think, 100 basis points or 75? I got 271 votes over there. 65% saying 75, but still 34 saying 100. I'm seeing in chat right now on YouTube that a lot of people are still saying that they could see 100. That's what we're going to be talking about today, even though most of us expect 75. What actually would happen if Jerome Powell comes out here and says 100 basis points? What effect would that have on Bitcoin? What effect would that have on the economy? I want to hear what you guys think in chat before we get there with Caleb Franzen. But speaking of that beautiful chat with I see some blue names and some green names, and even those white names, I really love them too. Why don't you go ahead and read a couple of those special green and blue names for us, Smay?
Gee whiz. I would love to. I would love to. All right, let's read some green names here. We have Grand Roofing Incorporated, and I'm pretty sure he does roofing. We have Crypto JMP, who I think is a psychiatrist. Then we have Queen, who is also a psychiatrist. We have Eric Brubaker, who is who owns a brewery and is a baker. We have here
isn't that just like a pub?
Tyler Main, who is a surf instructor. We have Matt C., who is the owner of a furniture empire.
Wow, I think you got that one dead on.
Yeah, I think I got that one right.
Furniture empire.
Then we got Mitch Shaw, who makes prayer shawls. And then we have Crypto Ben Franklin, who works for the money printing factory. And then we have
Josh Denham.
420 Wood, who works on a, you know where he works.
Josh Denham. What does Josh Denham do?
Josh Denham makes jeans.
Yeah, of course. Did you already say Brad Geidel?
And Brad Geidel.
He's our favorite Geidel.
Is he is a tour guide for the Alpines.
Nice.
Troublesome Creek.
Troublesome Creek is a
rafting instructor.
He's a dentist.
He's a rafting instructor. That's right. Thank you. And shout out to all of you guys. Dr. Fuzzy Eyeball is in fact an optometrist.
I was gonna say dentist.
Isn't optometrist? Anyways, I don't know.
Losing steam.
All
Steam. Time to move on.
Whatever. Yeah. That's what I meant. Anyways, back to you, Tim.
Good
that was
stuff.
Really good.
If you guys didn't get your name called out there with the green names, I'm to apologize. If you're wondering what
Adam Rourke. Sorry, I
thought you missed Adam Rourke. Go ahead, go for it. What's his profession?
Adam Rourke is I think Adam Rourke is a bison farmer.
A bison farmer. Yeah. There we go.
He's into ecology and stuff like that.
If you guys are wondering what the heck just happened to you as you're watching this show? Are you ever going to get that minute back of your life? The answer is no. But those were our members that we absolutely love, who are a part of the reason why we're able to come to you guys each and every single day. So massive shout out to each one of those. If you guys see those blue names with the wrench next to their name, those are our moderators. We absolutely love them, keeping this community the best and most uplifting, amazing community in all of crypto. We're about to jump into our market pulse with TShroom. But first, in case you were wondering, Tim, what is the market pulse brought to us by today? Well, I'm wearing the sweatshirt of Hedge. Hedge is fantastic. You guys know him. You guys love him. They're just phenomenal. They allow you to be paid in cryptocurrency from your workplace. And here's the deal. I'm going to go a little different today. For the moment, it is just the United States. So if you live in the United States and you are saying, how can I be paid in crypto? Hedge is a company for you. You can get $10 of free Bitcoin if you go sign up today with that link. But here's some good news. For anyone who's like in Canada or UK and is wondering, oh, what about us? How do we get this done? They are working as we speak right now to get that done sooner rather than later. So keep your eye out for Hedge. It's going to be exciting. It's just one more way to continue to DCA and acquire more crypto and save yourself as many fees as possible. If you don't have them already, go get them right now. With that being said, though, we're about to jump into our market pulse. TShroom, once you're finished with that sip, take it away.
Ladies and gentlemen, if you're listening to the caffeinated sound of my voice, then that can mean only one thing, and that's you are in the market pulse, baby. Let's go to my screen today. We're going to be starting off with what I think is a pretty good indication of why we would get 100 basis points from the Fed today, later on. And that is, if you look at the Bank of England, their last decision was September 15th, right? So they've already had it.
Caffeine's getting to you, isn't it? I can hear
it. My heart's
getting out of breath.
Pounding like a jackrabbit over here.
And
check it out.
He's so committed to the bit.
25 bips, 25 bips, 25 bips, 25, and then 50. Their last rate hike, this is the Bank of England, was acceleratory, right? So that could be potentially an indication that they're looking at, now they obviously have different inflation rates over there. They're dealing with a different barrel of monkeys, but minds think alike. These guys were all kind of educated, similar types of institutions. They're all getting similar data, and they're in similar circles. At the end of the day, I don't know that this is going to be that indicative. But if you're looking for a strong argument for 100 basis points to kind of sling around Twitter, sling around your friend group, and around the water cooler, the Bank of England did it. Not 100 basis points, but they had an acceleratory basis point hike on their last hike in their September hike. I just want to say hike.
What constitutes a bucket of monkeys?
Barrel of monkeys.
Barrel of monkeys.
What constitutes a barrel of monkeys?
Yeah.
When
if they have their own.
Well, the phrase is like, not my monkeys, not my problem. My barrel of monkeys.
I don't know. Is that the phrase?
What? That is definitely not the phrase.
I have never once heard that phrase.
Not my circus, not my problem.
Not my. I've heard the dealing with their own circus. I've never heard people dealing with their own bucket of monkeys.
Not my monkeys, not my circus.
It's your bucket of monkeys, not mine.
That's it. But barrel of monkeys.
You take care of your bucket of monkeys, and you keep them away from my bucket of monkeys.
I think this market pulse has been thoroughly derailed. This is now the melting pulse.
We lost him. Lost him.
We'll go over to our fear and greed index.
We lost him.
He's hysterical over there. Really no change at all. So we'll keep moving from that. Still in extreme fear. Not a surprise. I doubt we would move from this at all today because everything's in anticipating the big Fed decision today at 2 p.m. that we'll be live for at 2 p.m. Eastern time. Moving along, what is the Fed likely to do? Well, 83% of the CME future traders are pricing in a 75 basis point hike. So are we, right? But Caleb's going to be coming on the show. He'll be telling us why there's a case for a 100 basis point hike. Well, there's an easy economic case, let's kill inflation. But what is the likelihood? Right now, it's 17% of the market really thinks that it could be 100 basis point, 21 now. So that's trending between a range of 17 and 21. And that's been pretty much going on since what? Since Sunday? Something like that. So really since Thursday. But anyway, let's also get a little bit of context. Maybe you're tuning into this show for the first time. You don't know a ton about the Federal Reserve and what the heck it has to do with crypto. This is a historic chart of the U.S. federal funds rate going back all the way to the 1960s. And as you can see, in the 1980, it got crazy high, tipping out almost 22% there, which is insane. You're basically if you want to buy a house, you're out of luck. You're not buying a house. So fast forward to contemporary times, 2005, we were up at 5.2%, still pretty high for buying a home or paying off your credit card, but or getting a loan, business loan or something like that. So they were like, hey, the Federal Reserve was like, hey, let's bring it down to zero. They did, brought it down to near zero. And then 2015, they started a new regime, new hiked it up. And then in 2019, they started to bring it down. And then the pandemic hit and they brought it all the way down overnight, same day. And then, so now, inflation's been high. So they've been fighting inflation by bringing those rates up. And today is the day that they're going to be making another decision as to whether or not they want to go higher than those 2019 rates of 2.4, 2. Around that range, really 2.5 if you're rounding. So big day. Obviously, we can't stress this enough. If you're watching for the first time, interest rates are ultimately, the Federal Reserve is trying to use these interest rates to fight inflation. Inflation is something that causes goods to become more expensive. It makes your dollars, it makes your fiat currency less valuable, and it makes a dollar be able to purchase less and less bananas over time, less and less sandwiches, less and less homes over time. And right now it's at a dangerous level, above 7%, and it's showing signs that it's not really slowing down quite yet. So that is why, folks like us, people who are close, who have our nose closest to the market, we are predicting that the Fed could potentially have an acceleratory rate here and go up to 100 basis points like the Bank of England did. So that is the long and short of it. Hopefully I did a decent job of explaining that. If you're new to crypto, if you're new to inflation and global economics, tell me if I did well with that in the chat. But let's move into the stories here. Stablecoin issuer Tether ordered to produce documents showing backing of USDT. So Tether, the biggest stablecoin in the crypto world. Stablecoins are pegged to the dollar, and they are very popular for people to sell out of crypto like Bitcoin or Ethereum and sell into Tether to avoid selling back into dollars. And there's a lot of reasons why you'd want to do that. But the order requires Tether to produce general ledgers, balance sheets, income statements, cash flow statements, and profit and loss statements, as well as records of any trades or transfers of cryptocurrency or other stablecoins by Tether, including information about the timing of the trades. So pretty exhaustive there. Currently, there is also a lawsuit before the New York Supreme Court to have the New York Attorney General release documents it gathered in its investigation into Tether's reserve. CoinDesk is party to this case, so you can rest assured you're going to be hearing about it just as soon as you possibly can. And the New York Attorney General's probe into Tether's reserves concluded in February 2021 with an $18.5 million settlement. So Tether here in some hot water. We'll see if this actually evolves into anything significant. I think that their lawyers have a pretty decent case of saying that this is overreach. And I think that, but it doesn't look good for Tether because they have a major competitor, which is, USDC.
The only problem is that USDC, for example, the largest exchange still in the market is Binance. Binance does not do USDC anymore. USDT is the big one over there. So if USDT starts having problems, that could spell, and I know people have been talking about this for a long time, USDT crash or USDT problems could be a big issue for the entire crypto space. And especially, again, with moves like what we saw with Binance, no longer using USDC, but using USDT, and that's kind of their main focal point for stablecoins. Yeah, that's a big problem.
Yeah, so not great news there if you are USDT, if you are Tether. There are other stablecoins. It's not like USDC is the only other one. There's Binance's, which is BUSD, and there's definitely many more like DAI. And some more. So we'll be keeping an eye on that. My prediction for this one is that it's not going to damage Tether. At worst case scenario, the courts are gonna look in there and they'll find the funds to be able to match the Tether, unless they're extremely underbacked, in which case they probably should be brought to justice and they should be taken out of the market. But my hunch is either they can get the liquidity quickly and make it look like they've been backed all along, or this isn't going to be an issue because the lawyers are going to be able to protect the veil. Moving along, Binance and FTX lead $50 million race to purchase Voyager's assets. A report has shown Binance's current bid is slightly higher than FTX, so if they made the deal today, Binance would probably earn all of those assets. Voyager, which filed for Chapter 11 in July this year with outstanding liabilities of as much as $10 billion, initiated the process of selling its assets at the beginning of this month. The winning bid is expected to be announced on September 29th, although an announcement could come before that date. So definitely something to watch here, kind of narrowing in on this. If your money has been tied up in Voyager, first of all, really sorry that that's been going on. Make sure that you're pursuing mental stability and mental health, because I would not want to be in that situation. I would be very, very stressed out. But just know that, they're reaching, this is the next step that Binance or FTX is looking like. They're probably going to be getting these assets, and, they will do with it what they will. I think the terms of service are still going to be the same, meaning that the company really does own your assets in that point, but it's just another reason why you need to get on a cold wallet. There are other bids for it. I can't remember exactly who. Wave. So Wave Financial also has a bid, and then trading platform Crosstower also has a bid in. But more than likely, Voyager's assets are going to go to probably Binance would be my guess, but also FTX has a pretty good case for getting it too. Any thoughts on that, Tim?
Well, my thoughts are I'm whenever you're doing the market pulse, I'm always scrolling chat, just kind of keeping up with what's happening there.
Good.
And it sounds like there's something big brewing that we got to look into. It looks like on Ben's channel, BitBoy Crypto, he's talking about Sam Bankman-Fried. There's some sketchy stuff going on there. And that's something I think that's been speculated for a while, that there's some things about old SBF that are a little fishy. And it seems like Ben's pulling on a string on something that he isn't fully, releasing right now. I'll have to go back and watch the show. But I see Matt C, and I see who else is talking about it in chat? Tyler Main. They're talking about there's some stuff that's been speculated for a while, that Sam is kind of a sketchy guy. If something's coming out, that's going to be really interesting to keep an eye on, especially with the buyouts. Because remember, this is when he became starting in sketchy, it's like all these other exchanges started falling to the wayside. And Sam was sitting here with FTX's money, had a great money situation going. They were bailing out some companies, buying exchanges, using this entire opportunity. I heard people accuse him of the crash of Terra Luna, that he was involved with the crash of Terra Luna.
Wow.
Whether or not that's true, I can't speculate on that one, but make sure to keep your eyes on stuff happening with him. Is he a potential danger to the space, or is this just rumors going about and he's a great guy? I don't know. We'll have to keep this one up. Yeah,
well, he's been so Sam Bankman-Fried and the CEO of FTX has been entangled with Voyager for some time. Yeah. You can see here another borrower was Alameda Research, a crypto trading firm founded by crypto billionaire Sam Bankman-Fried, who also the owner of FTX. Alameda owed the New York-based firm $37.7 million worth of cryptocurrencies at the time of the bankruptcy filing. In June, just prior to Voyager's filing for bankruptcy, Alameda extended 2 credit lines to Voyager, one for $200 million in cash and a second for 15,000 Bitcoin. So they've been entangled, and if I'm Sam Bankman, I probably want to own Voyager just so that I can, settle all this on my books and bring it all in and have my CFO and my lawyers kind of smooth all this over so that it doesn't get crazy overcomplicated on the tax books and everything like that, and potentially draw the ire of the tax man. And these giant exchanges are already, under the scrutiny of the SEC and the IRS quite a bit already. So, I'm wanting to simplify things, bring it all into one house. The last thing I want is to owe Binance a bunch of money if they were to get Voyager here, and then they could start leveraging that debt against FTX. But hey, we will see. I think it's still early days on this, but we will find out by the 29th, I believe, what's gonna transpire here. Yeah, September 29th is when it'll be announced who's going to get all those assets from Voyager. But moving right along, Nasdaq to offer institutional crypto custody services with plans for expansion. A report has come out. Look at those gaming computer ads. I love them. We believe this next wave of the revolution is going to be driven by mass institutional adoption. I can think of no better place to bring that trust and brand to the market than Nasdaq. And that is from Nasdaq, some Nasdaq executive, more than likely. Custody is foundational, he says. Off the back of custody, we can start to develop our other solutions, offer execution services, liquidity services, and think about how we support new markets. We know how to operate under regulatory regimes, and we continue to innovate under the rules of the road. Embracing regulation as it comes is something we do, and institutions want us to operate under that framework. Nasdaq's custody services are currently pending approval from the New York Department of Financial Services. So this last quote is actually really, really interesting, because in one thing that's kind of, there's a big scarcity of in cryptocurrency is regulatory clarity, right? There's a lot of really big leaders that are crying out for regulatory clarity, and if the Nasdaq was to join and into the crypto world and really lead with a crypto exchange here, they would set a giant precedent for how to operate without drawing the ire of the SEC or the IRS or any other government institution globally, really. Because you can rest assured, if they were to get sued or if they were to break a rule, they would be brought to court immediately, because there's so much money that could be transferred, and so many fees that would be rewarded, that government entity would be highly incentivized to bring down Nasdaq, or at least bring them to justice. So Nasdaq, the point is here, they would be minding their P's and Q's, and more than likely what Nasdaq does with their exchange would be kind of the new way that you do it, right? Just because they're so familiar with how the government works, with following rules and with compliance. The other one that you have to be keeping an eye on. So this is the Nasdaq making a big move right after what? Well, the narrative started with giant institutions getting involved in opening their crypto exchanges, really with BlackRock getting in bed with Coinbase. There's just a partnership as of now. They didn't buy them out or anything. But Coinbase being one of the biggest exchanges, especially in the United States, them getting a partnership with BlackRock is extremely significant for institutional buy-in, right? But then you also had, last week, you had Fidelity and Charles Schwab and one other institution getting together and announcing that they're going to be collaborating on a crypto exchange. Now Nasdaq has. And Nasdaq is the second largest exchange for stocks, right? So they understand how to be a marketplace. So they're going to be a force to contend with. And it's just like these quotes were saying, this is a way for institutions to really get in and feel safe about their investments, whether it be Ethereum, Bitcoin, or any of the other altcoins. Tim, did you have any thoughts on this big one?
What I'm thinking about, even as you're kind of wrestling through what this could mean for institutional space, and then a lot of big players getting involved that are not friendly to the space, like BlackRock, but they're fully adopting crypto. When I say they're not friendly to space, I don't mean not for the price action. I mean for the decentralized aspects of cryptocurrency. This reminds me of something Mark Yusko was talking about, and I think it's really interesting because he talked about early on, the first couple of years of Bitcoin, people ignored it. It wasn't even mentionable. Like, I honestly didn't even hear about Bitcoin's existence until closer to 2014, 2015. And even then it was minimal. Then they started laughing at it. There was the whole phase during 2017, 2015, 2017. People were laughing at it, saying, "Well, that's that coin that all the nerds and the geeks use." And then now we're in a phase. We've entered a phase of fighting it. But I'm partially wondering, with this institutional adoption, because that some people are like, "Oh, this isn't fighting. They're adopting it. They're jumping on the bandwagon." And I'm sitting here wondering, is that not maybe the greatest way to fight the true power of Bitcoin? Being that decentralized currency that takes power away from the centralization and brings it to the people is maybe the best way for them to fight it over the next stretch, actually for them to get in and try to manipulate and hold as much of it as possible so they can do the trick. Here's the problem. They will realize very fast the more they fight its decentralized nature, the less valuable it will be. It'll only be as valuable as they're willing to put money into it, and then they'll have to short it down. It's a belly of the beast type of thing. It is a Trojan horse thing. I'm actually okay with institutions like BlackRock and so forth getting involved, as long as those of us, the people, continue to do our research and realize we should not settle for institution and centralized leadership of currency, we should understand that we have a golden opportunity over the next 10, 15, 20, 50, 100 years to actually make currency decentralized again, and let's not forget it. So while they're going to fight us and they're going to try to control it as much as possible, there will come a point where the value of Bitcoin will go up because we realize the power of decentralization. And we've talked about that before, and we'll talk about that a lot more in the future. But don't be surprised if when you're hearing all this stuff happening, don't realize this is a form of fighting the decentralized nature of Bitcoin.
Absolutely. Well, I want to wrap out the market pulls here with just one more quick headline, and then we'll jump into the question of the day and introduce Caleb Franzen. This is a really big headline, guys. This isn't necessarily going to directly affect crypto, but I thought it was important for you all to know. German government nationalizes Uniper in move to secure energy supply. So this is something you don't see except in like communist countries in like the 80s. Germany has nationalized their largest energy company. That just goes to show how serious it's getting over there in Europe. This is really big. What does nationalize mean? That would be like if the United States said, hey, ExxonMobil, you are now no longer a private company. You are now owned by the government, and we are going to send in our guys, and they're going to run the show and step aside. And they just do it. And that would be it's pretty crazy, but it just kind of goes to show just how serious it's getting over there. The German state will spend 8 billion euros to acquire shares in Uniper it does not already own, giving it a 99% stake. So this is crazy. This is what happens in war. These are really dire times over there in Europe. Honestly, our thoughts and prayers are with you guys as things really do turn for the worst here. But also, just stay positive and try to conserve energy as much as you can. But with that, we'll close out the market pulse, and Tim, take it from there.
Yeah, I mean, I was gonna almost. I mean, that's a really serious issue. I was gonna say we have a German speaker in the studio. I was gonna see what he thought about it.
Nein gut.
Well, you're not gonna go to your camera to.
Nein gut.
Nein gut. I agree. Let's bring Caleb Franzen on here.
I don't know if that was a proper German.
Probably
it was just
not.
like a combination of words
well.
meaning no good. So not good.
Yeah. Caleb, can you hear me now?
Das ist nein gut.
Oh, I don't know if Caleb can hear me yet. You there? Hello? We see you.
Oh, hello.
I don't think he can hear us. We can see him. He is here.
You can't hear us? Hello?
Hello.
Hey.
Hey.
Hey, Caleb, can you hear us?
Yeah, I can hear you guys.
There we go.
Okay,
Okay,
excellent.
boom.
Hey, what's good, guys?
What's going on, man? We are about to jump into some great stuff. I'm excited about everything Caleb's going to be talking to us about. We're going to be talking about the Fed. We're going to be talking about Bitcoin, but we're also going to look at the Bitcoin price, not only just USD. We're going to look at it over other currencies as well. But before we jump in there, this entire segment, our discussion topic, is brought to you guys by Anthony Price. He is our CPA. If you guys are sitting here wondering how can you protect all of your crypto from taxes that Uncle Sam wants you to spend on, you probably want a CPA. Just like normal taxes, they save you thousands, if not millions of dollars, depending on what your tax bracket is. CPAs for crypto are no different. The only difference is you want one that understands crypto, and your man is Anthony Price. So if you guys are looking for a good CPA, go check him out with the link down below. Before we jump into our first question, Caleb, I'm going to throw it over to TShroom for our very intriguing. This one's actually, I think this was a guest. Like, we had someone write this one in. So community-influenced question of the day.
Absolutely. And I'm going to read that right now. Smay, do not go to my screen. If you do, there's going to be real trouble. So the question of the day is, would you rather be able to read people's mind for a decade, but you'll only get one person max per week that you can read their mind, or get 0.5 Bitcoin per month tax-free for a decade?
Half a Bitcoin.
Half a Bitcoin?
Half a Bitcoin. So I'll read that again, just to clarify. And then we'll throw it to Caleb to see what he says. Would you rather be able to read one person per week's mind for a decade, or one person per week, like you can change it every week, or get 0.5 Bitcoin per month tax-free for a decade? And while you're thinking about it, this question comes from Victor Delgado on Instagram. He's our buddy who meets us at the gym every once in a while. He's a super cool guy. Caleb, what do you think?
So as cool as it sounds to be able to read people's minds for a decade, I'm going to be a greedy bastard and go with half a Bitcoin.
Wow.
Yeah, I'm torn on this one. Normally, the rest of the questions, I very clearly have one answer over the other. The Bitcoin's guaranteed. So that is the wrestling point I'm at. The Bitcoin's guaranteed. I didn't know it was gonna be 0.5. I thought it was gonna be a whole Bitcoin.
Yeah, well, I changed
You just
it
cut
last
my
minute.
gains in half. That's still 6 Bitcoin a year, But here's what I would do. I actually think I would go with the reading minds. And the reason I would do that is I would just become a professional negotiator and I would work for companies to close deals, and I could make way more than half a Bitcoin a month doing that deal. If I just know what the person across the table is thinking at all times and I'm only in that negotiation. I mean, you didn't say I couldn't keep the same person. If that negotiation goes on for like 2 months, I can keep it the whole time on him for 2 months.
You just get
him
to pick
or her.
you get to pick a person.
I think what I'm going to do is I'm going to read people's minds and I'm going to become a professional negotiator. Final answer.
Okay. Smay, what do you think?
Before the show, I was pretty dead set on mind reading, but now that I was thinking about it, basically getting a half a Bitcoin a month for a decade would be pretty nice. And it's like, it's
guaranteed.
The thing is, I already have never read anybody's mind. So it's like, I don't know how productive that will be, but it's like, I feel like it'd be nice like now to have a lot of money. So I'm going to say Bitcoin, half a Bitcoin a month.
There you go. Well, I get the luxury of getting to read the chats before I make my decision. And Clout Casino said, "No limit Texas Hold'em, read people's minds," and that I think at
there's
that
a lot
point,
there's a lot of scenarios you can go down.
You could probably be the best. I
But
definitely.
Only one person though.
But yeah, you could only read one person at the table.
Yeah,
that's true. But I think that would give you an advantage still if you're a good poker player. But there's also,
and you just blew the whole week on that one game because you got a whole week.
Yeah.
That you can only read that guy's mind. He might be the most boring person after that.
But
game.
there's a lot of things that you could do.
What if he's the worst guy at the table?
You could go up.
He was already gonna lose.
You could go to Wall Street and just like go around and say, "Hey, I bet you $50,000 I can pick the number that you're thinking of in your head." And then have that person write it down and tell their buddy. And
listen. You could
just go around and like.
No, this is the best. I'm just gonna read Nancy Pelosi's mind, and then I'm gonna get really rich, dude.
Okay, Smay takes the cake
right.
for the best comment for the answer to this question.
Smay, while we're about to jump into our crypto, go ahead and put a poll. Put a poll in chat. Right. We've asked the question: would you rather read one person's mind per week or half a Bitcoin per month for the next 10 years?
Yeah.
Caleb, let's go ahead and jump on into the crypto stuff, though, while Smay is working on that. What are your thoughts about today? I know there's a lot of people, it's looking like a done deal that you're going to have 75 basis points, but there are still people out there that are saying that we might see 100. I know right now the futures are saying that it looks like a 17% chance of 100. Mm-hmm. All the polls we've done, both on our channel, I've done over on Twitter, which, again, small select people, we're seeing numbers upwards of 30%. What would you say in your mind is the actual probability? Do you think there's any chance we see 100? And if so, what would happen to Bitcoin and what would happen to not just the United States economy, but the world economy if the U.S. Fed goes with a 100 basis point increase?
Okay, so my response to that would be, first of all, I don't think that there's any real likelihood that we get 100 bips today. I'm not going to tell the market that it's wrong. The financial markets are the aggregation of all of some of the smartest minds in the world telling you what their expectations are for the future. And so I'm just one person who fits within the overall aggregation of market expectations. But from my perspective, I think the Fed would be too late to move 100 basis points today because it essentially shows some sense of panic or an official acknowledgement that they're too far behind the curve. Because if you remember back to Powell's comments, I think it was even in the July speech, but he acknowledged that monetary policy is going to take time, and the rate hikes that they've already done is going to take time to have its full effect on the economy and financial markets. And so how can he say that 2 months ago? And then over the course of the last 2 months, we've seen headline inflation decelerate, still increasing way above what their target rate would be. But how can he say that, see the data evolve at least in their favor, I suppose you could say to some degree, and then all of a sudden raise by 100 basis points? To me, that just doesn't make sense. And it, again, would further damage their credibility. The time to raise rates 100 basis points was, in my opinion, back in July or even perhaps in June, to show and express to the markets a significant amount of resolve. And I mean, we've already had an extremely aggressive Fed, but an even more aggressive action. And so if we do get 100 basis points today, which I think was your second question, I mean, somewhat of a no-brainer. I think markets would sell off today. As it pertains to the overall impact on, the broader US economy or financial system, I don't think that there's much of a differentiation in the impact that a 75 basis point rate hike is going to give versus a 100 basis point. Because where we are today has already been arguably the most, let me say it this way, has been the fastest pace or acceleration in the federal funds rate, in the 2-year treasury, in 30-year mortgage rates, in 10-year treasury yields. Regardless of the rates that we look at, if we measure them on a year-over-year percent increase or a year-over-year nominal percent change, we're basically at historically elevated rates of change.
Yeah.
That makes a lot of sense. That was a question someone even asked over on Twitter, and I saw you saw that. Do you think that the only difference between 175 right now is what the price action will do over the next week or 2 or 3 weeks? Meaning 75, we probably go back up, 100, we go down, or do you think there's any more significance? I know you kind of just said there's not too much of a difference, but what would be the difference between the two?
Well, I think you're raising an interesting point, which is differentiating between some of the long-term broader impacts versus market reactions over the course of the next 3 to 5 days. And I think over the next 3 to 5 days, if we did see that 100 basis point rate hike, I think we would see a sharp, immediate sell-off. But perhaps the market could spin that into somewhat positive news, saying, look, the Fed is now moving by 100 basis points. It's very likely now that this is going to cure inflation and basically speed up the process for them to eventually pivot, right? So, the market is always looking for the silver lining here, right? So It's our job as analysts to objectively try to understand the immediate implications, but then try to understand how the market could eventually come around to interpret Fed action. And so it's possible that we would see an immediate market sell-off as a result of the 100 basis point rate hike, followed by, over the course of the next week or so, perhaps some upward momentum. I'm not sure, though.
Yeah. Well, and here's the last thing I'm going to ask about the Fed before we jump onto some charts and go through Bitcoin price and other things as well. What might be more interesting than the number even itself, like I said, I think most people are sitting here saying we're going to get 75. What's really going to be interesting is the remarks that Jerome makes in his press conference at 2:30. Do you expect those to be more dovish or more hawkish, and why do you think that is?
So I would totally agree with you. And in fact, for the past, several months and throughout all of these FOMC policy decision meetings, I've been saying it's probably more important to be watching Powell's press conference, his rhetoric, his tone, and the language that the Fed is using to express where they think inflation is headed, where they think their monetary policy is going to move, so on and so forth. And so I would definitely agree with you there. And I'm sorry, what was your second question?
So the second question is, so do you think he's going to be more hawkish or dovish? Like, do you think he's going to come out with 75, but then say, guys, we're still freaking out? Or is he going to come out with 75? And again, my theory is almost like he sits in a golden opportunity where he's been behind the ball for so long that now that everyone's afraid of 100, he's going to come out and say, guys, it's 75. I know people are freaking out. It's not as bad as you think. We have a great control of it. Yes, we have a narrow area for a soft landing, but we're going to make it with these 75 basis point increases. Do you think he gives us a more reassuring message that calms the market down and potentially sees both Bitcoin, the stock market, actually get a little boost? Or do you think he comes out kind of still putting some fear into the space about future interest rate hikes?
Got it. So I would expect to see somewhat of a continuation of Powell's comments at Jackson Hole, which were, a very short and brief and very concise statement about Federal Reserve, right? Like a resolve, excuse me. And so I think, the Fed acknowledges where they need to go, where inflation is. And so in the press conference, I would expect to see him either directly or as the result of a question really differentiate between the trends that they're seeing in headline inflation, as well as alternative measures like core, trimmed mean, median CPI, sticky price CPI, all these other different factors, which are still accelerating to the upside, despite the improvement that we've seen in headline CPI, which I've been coming on your guys' show and telling and expressing my view on this, which is that all of the disinflationary dynamics that we've seen thus far are a result of lower energy and commodity prices.
Right.
And so when we have a broad basket of other consumer prices still continuing to accelerate, shelter at 40-year highs, food prices at 40-year highs, the Fed is still going to see a lot of reason to keep their foot on the
Yeah.
I guess depending on which direction you're looking at it, I usually say keep their foot on the gas in terms of continuing forward with rate hikes.
But I mean, but that's the question though. Do they need to go further down to the floor and go to 100, or do you think 75 for this month and then November and then December and potentially is there one in January, or is it skipped to?
I was literally just on the screen. September, November, and December.
Is there any? What is the future?
That's
of,
a good. I don't.
They don't have them scheduled for 2023.
At least on this resource, they do not go into 2023.
So do you think that we see 75 for all the last three? Do you think that one of them has 100, or potentially does one of them have a 50? What are your thoughts about that?
So I'm going to leverage some comments from an economist, Mohammed El-Arian, who a couple of weeks ago said 75 is the new 25.
Yeah.
And I would totally agree with him there. If we remember back to the 2015 to 2018 rate hike cycle, the Federal Reserve was very clear about the path of monetary policy. They basically came out and said, every other meeting, we are going to raise rates by 0.25%. And so over the course of basically that 3-year period, that's exactly what we got, 0.25% every other meeting over the course of that time period. And so I do believe 75 is quote unquote the new 25, if you will. And so I do expect the Fed today to move 75. It's very likely and it's interesting because if we remember back, right, like at the beginning of the year or in December of last year, market expectations was for the Federal Reserve to raise rates by 2 to 3 times in 2022, with rate hikes beginning in the latter half of the year.
Wow.
That's crazy.
Right. And so that essentially said that in total for 2022, we were only going to get the federal funds rate up to 0.5 to 0.75 or 0.75 to 1% target range, right? Depending on whether or not we were going to get 2 to 3 rate hikes. And so here we are today sitting at 2.25 to 2.5, about to get the third consecutive 75 basis point rate hike. And if you think about why pressure has come into the market across every single facet of the financial system, right? Stocks down, crypto down, bonds, bloodbath. The only thing that has yet to really pop yet is real estate, which is why my latest newsletter really focused on the real estate market. But we have to think about this. This is the worst year since 1937 for a traditional 60-40 portfolio. Do you think that that's a coincidence, or do you think it has something to do with the rapid acceleration in yields that we've never seen before? We've never seen on a year-over-year basis the federal funds rate accelerate this fast.
Yeah.
You know, I know I said the last one was the last question, but as you're speaking, it makes me come up with more questions. Then we'll jump into charts here in a second. The last one, when you're speaking about pressures, where do you stand with the concept, conspiracy theory or not? I don't know what you're going to call this, but the pressure that he could be under with November elections coming up, do you think that affects Jerome Powell and the Fed whatsoever, or do you think he keeps that independent? But I know a lot of people are suspecting that maybe there's going to be some pressure to go more dovish and to let the economy get a little bit of a breather leading into those elections so that it doesn't change aisles. Do you think that that's a case, or do you think that Jerome Powell's not really taking that into account?
So I'll preface my comments on this by saying that I'm really a kind of Federal Reserve purist, right? So when I hear that, they are, they have their dual mandate bestowed upon them by Congress, and Powell and other Fed officials are, essentially confirmed by Congress, but their powers to act independently are separate from government, right? The Federal Reserve is a private bank. And so, it is always fun to think about those kind of political pressures, if you will, but I'll just remind people, right, back at the beginning of the year, people were saying the Fed can't raise rates because they're going to pop the asset markets. And if they do, the Democrats won't win in the midterm elections. Today, what's the narrative? The Federal Reserve needs to raise rates because inflation is the number one concern on voters' minds. And if they don't get inflation in check, Democrats aren't going to win the midterms. So at the beginning of the year versus today, we've seen a total shift in what the Fed needs to do in order for the Democrats to win. So it's hard to say, one way or the other. So again, it's an interesting topic and something to perhaps think about. But generally speaking, I think the Fed is a apolitical body. If we remember back to the 2015-18 rate hike cycle, President Trump was in office saying that we need to slash interest rates. We have all of these countries devaluing their currencies. It's making us non-competitive, this, that, and the other. Today, we're having Biden put pressure on the Fed saying we need to continue to raise rates because we need to fight inflation. Powell and the Fed know this, right? It's like it's staring them right in the face. They don't need Biden to tell them that they need to get inflation under control.
Yeah. Really quick, I have the answer to your question about 2023 FOMC meetings. There's going to be 8 of them. So 12 months in the next year, and there's going to be 8 decisions. A joint decision in January, February, and a joint decision again, like this year in October and November. So we'll get 8 decisions. And here's something I wanted to point out, though. You'll see on my screen there's an asterisk beside March, beside June, beside September and December. So we are currently in an asterisk month, and that means that you actually get a meeting associated with summary of economic projections. So we are in a month right now. We're about to get economic projections, and I'll send a quick question over to Caleb.
Yeah.
What are you looking for? Because we're getting some more projections with this. The most important one I think is the terminal rate, but we're also going to be getting a dot plot, and then we'll also be getting an economic outlook. So which one of those do you think is really important? Which one are you keeping an eye on there, Caleb? Really curious to think what else there is that you're going to be taking a look at.
So from my perspective, the SEP, the Summary of Economic Projections, is perhaps an interesting gauge for where the Federal Reserve sees things as of today. But in terms of its accuracy of where we're going, it doesn't really have much significance from my perspective.
Gotcha.
I'd be curious to see what was the Summary of Economic Projections projection for the terminal rate in December or November of last year.
Yeah.
Right. Again, the Federal Reserve and the market expectation was that we were only going to raise rates by 2 to 3% or 2 to 3 times in 2022. So if we were basing in November and December our financial decisions, our economic outlook based on the Federal Reserve's terminal rate at the time, we would have been screwed all year. Right. So it's interesting. Like I said, it's interesting to see because it tells us as of today, where does the Fed think we're going? Obviously, they have somewhat of a bias. They're going to say, of course, that inflation is going to move towards their 2% target in a very linear fashion, as they always do. Yeah. That unemployment is likely going to tick up, that the terminal rate's probably going to be above 4.5%. I mean, I could probably tell you right now what most of the SEP is going to say, right? And so, again, it's going to be very in line with market consensus and not really have much accuracy in terms of where we're actually going.
Awesome.
Well, we're in transitioning. We're going to look at some charts really quickly. Go to my screen very fast, and I'm going to get Caleb's take on this before I turn it over to him to do some charts. Last night at 2 a.m. Eastern Standard Time, we actually set a shorter time frame high on the Dixie. I'm looking at the Dixie right now. The highest we had been previous to this was 110.782. This morning at 2 a.m., we got all the way up to 110.866. And as we are talking right now, the Dixie is pressing up, and it is now sitting above. It's getting really close to 111. Caleb, do you think that is a short little rally before these Fed announcements coming here in just a couple of hours? Do you think this is a sign that the dollar is getting stronger? It's funny because Bitcoin is not really dropping. Ethereum's not really dropping. ADA is not really dropping. But the Dixie is climbing and is sitting at, again, a high, a short time frame high. And when I say short, I mean years. What are your thoughts about the Dixie? And then you can go ahead and lead it off and start talking about Bitcoin charts.
So I was on your guys' show back in early September. I think it was September 7th when I did some back checking on my comments on this. And at the time, the Dixie was trading just above 110. And I had said,
that's the peak I'm looking at.
Yeah. Well, not that it was the peak, but that I expected to see a short-term cool down, right? And I said on the show that I expect to see us get back towards that 107 or 108 level. That's exactly what happened, right? We fell to the middle handle of 107, and now we've come right back to 110. And here we are today. I think we had that consolidation again. When I was on your guys' show back in early September, I said markets that are trending need to digest the direction that they're moving. And so we'll go through these kind of face rip rallies followed by, a market reset, that we get a recalibration of expectations and pricing. And then typically, like I said at the time, the trend is our friend and we continue to move in the direction that we were initially going. So I don't know exactly how long this current new rally is going to last. But again, all of the fundamental macro factors are still in place for the dollar to have tailwinds to rise. That doesn't necessarily mean that the dollar is going to continue to rise, but my general sentiment is that the dollar has tailwinds to rise, meaning the likely case is that we continue to see upward momentum. The interesting thing that I'd like to point out that you're kind of alluding to in that chart is that today's kind of an interesting day, because while the dollar is up, we're seeing yields on 10-year treasuries decline. And so typically the dollar is going to move in line with the direction of yields, because it, again, increases the amount of money that a US dollar-based investor can generate on their capital.
Yeah.
And so there's that classic saying, follow the money, but it's always important to recognize why does money flow in one way or another? And so when we think about global capital structures, money is always going to flow to where it's able to generate the highest yield. And so it's very interesting to see on an intraday basis when we have yields moving lower and the dollar moving higher, because typically they have a positive direct correlation, not an inverse correlation.
Just means so one of them's wrong.
Sorry.
Just means one of them's wrong, right? Which one's wrong?
Well, it could mean that one is wrong. So typically the bond market is considered smart money. So it's very possible that yields moving lower is a sign that the bond market thinks the Fed is going to be slightly more dovish today. And I would say that let me say it this way. I would perhaps agree that, there's a strong likelihood that we see that. And what I want to say is this: the reason why I can confirm that belief is because we're seeing risk assets, particularly in the stock market, move higher today. And so one thing that I've always pounded the table on is that financial asset prices have an inverse correlation with yields, because we're discounting future cash flows at a lower discount rate, at a lower interest rate. And so as yields fall lower, asset prices move higher. And so again, we're seeing an interesting divergence where dollar is up, yields are down, but financial assets are up. So again, from my perspective, this means that we're seeing global capital flows move into the dollar despite yields moving lower, and people are now buying US dollar denominated risk assets. That's how I'm interpreting today's action.
And I'm just even like working through that. I mean, could this not be? We always see volatility leading up to the announcement, right, and we always see volatility kind of show for a couple of hours after the announcement. Could this just be? Could it be that the yields are doing what people are actually investing in long term, and there's just some trading going on, some volatility going on leading up to this announcement? That, again, as we kind of suspected, if we get that 75 basis points, a lot of people believe both Bitcoin and stock market, the price has been baked in. We should see at least a short little rally. Is that potentially what's happening here, or you don't think that's what's going on?
No, it is potentially what's happening. And so, like I said, the bond market is considered to be smart money. Yeah. And the signal that they're giving us is being confirmed by risk asset prices. Yeah. And so, I started the show by saying I'm not going to ever tell the market that it's wrong. And so we need to listen to the signals that it's telling us, and it's perhaps telling us to expect a slightly more dovish Fed today. I might not necessarily agree with that, and so I'll position myself accordingly. But at the same time, it's always worthwhile to keep a pulse on market expectations.
Yeah. Well, let's go ahead and jump onto some Bitcoin charts. What you got for us today, Caleb? I'm really excited to see what you got going on.
Let's do it. Let me share my screen real quick. The first chart that we're going to go over is just a pure chart of Bitcoin. Can you guys see it okay now?
Yep.
Yes.
Perfect. So what we're looking at here, I've added 3 exponential moving averages on a weekly basis. The yellow one is the 52-week moving average. The blue one is the 104-week moving average. And the red one is the 156-week exponential moving average. You might be asking, why the hell are you picking these random numbers? They essentially add up to, on a weekly basis, the 1-year, 2-year, and 3-year exponential moving averages, respectively. And so one thing that I found to be quite interesting is if we look back, you could say through history, we can see that bear markets tend to end at some point when the 1-year moving average crosses below the 2-year moving average, the teal one. The interesting thing is, if we go back to the 2018-19 bear market, if you will, this actually never crossed over. So what we're seeing on the chart right now is the first crossover essentially since the 2015 bear market all the way back here. And so this is a very interesting signal because, for one, this has only happened, as far as I could tell, one other time in Bitcoin's total price history. And the second factor is, if we look at the chart again on kind of a long-term scale, we can see that neither the 1-year or 2-year moving averages, the yellow or the blue moving averages, have ever crossed below the 3-year annual trend. And so like if we go back here again to the 2015 bear market, the 1-year moving average never crossed below the 3-year.
It got close.
And so I'm sorry?
It got close, but yeah, it didn't cross.
It got very close, but it didn't actually do it, right? The same way that it got very close to crossing here between the 1-year and 2-year, but didn't actually do it. And we continue to move higher from there. So right now, I'm looking at this chart and it's very interesting. And I think it's worthwhile. I said earlier, we're living through a historic period of monetary tightening, regardless of how we measure it. And I expect to see a lot of firsts in this market. And so that isn't necessarily a prediction that we're actually going to see the 1 or 2-year trend fall below the 3-year trend. But I do think it is a heightened possibility. And I think it's something that people should generally have on their radar.
Yeah.
So that's the first chart I wanted to share. I'd love to hear your guys' perspectives on that.
I'd never seen that one before. So that's really interesting. But I've said this before, that I think that every bear market has its own little things. And of course, this is coming from a guy who, this is my first full bear market. I kind of came in towards the bottom of the last bear market, on its way back up. But when I'm doing my historical analysis on it, I'm talking to people who have been in lots of them, I see more similarities to what we saw back in 2015 than what we saw here in 2018. And so, a lot of people want to compare bear markets, and there's no such thing as a perfect comparison. But if you wanted to find similarities, I think this one has a lot more similarities to 2015 than 2018.
Yeah, absolutely. And
agree.
Yeah, I've got up on my screen this is more of the, actually never mind. This is about the ETH merge and the Bitcoin halving. It's not relevant for today.
I have a couple other Bitcoin charts that I'd love to share with you guys.
Yeah, go for it.
Okay. Let me pull this back up here. So what we did, like I said, we just looked at the nominal chart of Bitcoin, but what I'd like to do is actually look at an alternative way of evaluating Bitcoin. We have obviously a dollar bias. Everything that we price is in dollar terms, using the dollar as the denominator for any asset, for any good or service that we consume. But it's actually very interesting to price Bitcoin by a different currency. And so we could look at something like the Japanese yen. So we could look at the price of Bitcoin that Japanese investors are paying.
Yep.
And this is interesting because the big headline for most of 2022 has been the bloodbath that we've seen in the yen. So with our denominator falling, all else being equal, our output should increase. But obviously Bitcoin has been falling, which is our numerator. So we've been in still a decline in terms of the price. The one thing that I'd like to highlight is if we look at this 2021 support level, acted perfectly multiple times, which is now flipped into perfect resistance so far in 2022. And I was outlining this breakdown in real time, and it's continued to be effective even today. And so if we look at price structure right now, we're right on this lower bound from the year-to-date lows and this kind of support trend line. We fell beneath it temporarily a couple of days ago, but now we never closed below it, which is an important signal, and it's something that's worth continuing to watch. But as we continue to move further in time towards this kind of inevitable inflection point, I'm expecting to see a squeeze in either direction. But again, the trend is our friend. We've been in a downtrend for the past 9-10 months. And so objectively, we must be willing to accept the fact that it's very likely that the squeeze gets pinched to the downside, which could be foreshadowing more short-term pain, perhaps. So I think that's one thing worth highlighting.
Yeah.
When you say
good.
short-term pain, what short-term pain to new lows, short-term pain back down to the current lows around 18,000, 17,600? What are your thoughts about short-term pain? What does that mean?
Sure. So what we could do is we could add another kind of rectangle or range here on the chart. I'm just throwing this on from the year-to-date low wick to the year-to-date low close in BTC JPY. Mm-hmm. And so it's possible if we break below this range, we could fall back kind of into this spot down here. And, even if we look at the raw price of BTC USD, that same range has been effective for what we're seeing right now, right? In fact, we're essentially testing it this morning and today. And so it's very possible that BTC JPY could follow suit, break below this support trend line and get down into this green rectangle, at which point we'll continue to look for potential support, but must acknowledge, like I said, the trend is our friend in a way, and we must be willing to accept that it's possible that the support trend line the support range does break down. So again, my theme for most of 2022 has been risk management. And I was on your guys' show back in September, and I said risk management is only sexy until it is only sexy when it's too late. And so, look, I don't know where the market is going, right? No one has that crystal ball, so we can only attempt to objectively analyze trends and try to get an understanding for where we might go. So conditional statements, if then analysis. And so right now, that's essentially what we've done with this chart. And again, is echoing a need for further caution and non-speculative activity in this market.
Yeah.
Well, I know, Caleb, when I was talking to you this morning, you said there's also some charts you wanted to look at, because we always, and again, I think a lot of people do, we always look at the Bitcoin over USD chart. But there's some interesting things you said that you found over on other charts, Bitcoin over, and I believe you had a couple different currencies there. Do you still have thoughts you want to go there, or do you want to save that for another video?
Yeah, let's do one more,
yeah.
Which I think people will find really valuable. And what we're looking at here is, again, we're taking BTC USD and we're denominating it by the Nasdaq 100.
Nice.
And this is an interesting chart overall. If we look at it on a long-term basis, I mean, generally speaking, this is going to look like the nominal price of Bitcoin, right? BTC USD over time. But it's important to look at this because it essentially shows us from a traditional market perspective how traditional investors are moving along the risk curve. So when we think of the Nasdaq 100 as being tech stocks, which are largely considered to be high beta stocks in general, right? So tech stocks are more risky than regular stocks. Bitcoin is considered to be a more risky kind of tech stock from a traditional perspective, right? I'm not saying that I view it that way or anything like that, but from a traditional market perspective, that's the clear view. And so when we look at BTC denominated by the Nasdaq, this chart's super important because, again, not only are we retesting a pivotal long-term trend line that goes all the way back to the 2018 lows, we retested it during the 2020 collapse. While we did fall below it, the reason why I'm tagging this additional level down here is because that was where the lowest weekly close was back in March of 2020. So I think that's an important level because we didn't actually follow through with this wick. So the weekly close there is important. And we can see that price just kind of continues to consolidate around this level. We did dip below it a couple of times here with these wicks. We did temporarily close below it back in mid-August. But again, we just kind of continue to consolidate around here. From a bearish perspective, if you wanted to analyze that, we could see it acted briefly as support here. And now, for the first time, we're starting to see it potentially act as resistance. As we know, former support can become future resistance, and former resistance can become future support. And so as a technical analyst, it's important to acknowledge that we have fallen below this long-term support trend line, and we are potentially using it as resistance now.
Wow. Well, Caleb, thank you so much for coming on here. And here's the good news. If you guys are wondering, hey, when can I hear more about Caleb? Just wait till this afternoon. At 2 p.m., we're going to go live for that Fed announcement, and Caleb will be joining us. We're going to react. You guys will kind of see us because we're going live at 2, so you'll see our live reaction to what the number actually is, and then we'll talk about it all the way up until 2:30. We will go live with Jerome Powell as he gives his press conference, and then we'll stay around for a short 15 minutes and kind of analyze what our thoughts are about that meeting. So make sure you guys come back at 2 p.m. to hear more from ourselves and Caleb as well. Caleb, we will see you here in just a couple of hours.
Sounds good, guys. Had a lot of fun this morning, and thanks for having me on. Look forward to chatting again this afternoon. Should be an exciting rest of the session.
Absolutely.
All right, see you soon, Caleb. TShroom, what was your favorite? What was the most interesting part of that? Like there were so many nuggets there to pull away. What was your favorite from that little interview?
Well, I was interested in what Caleb had to say about my question. So he kind of he made a good point. Is that the dot plots, which we don't talk about very much on this show, for the Federal Reserve, the Federal Reserve's dot plots is basically what all of the presidents are thinking the terminal rate should be in the future. And he made a good point that in this environment, in this high inflation environment, those dot plots are becoming less and less relevant. But I still think that the terminal rate today is going to be extremely important to closely analyze. So I would disagree with Caleb. I think that's one of the only things that I would disagree. And I'm not saying that he doesn't think the terminal rate's important or that what they they come out with today as their new terminal rate is important. I think I'm sure he thinks it is, but he kind of downplayed it a little bit and was to the effect of, we don't know what's going to happen next, and therefore, this terminal, whatever they print today in terminal rate, isn't necessarily going to be all that reliable going forward, because they're going to have to revise that again in December. And so I would just take the other side. I think the terminal rate is going to be the thing that moves markets today. I think that's what is going to be in the headline of the Wall Street Journal and WAPO and everything else that's interested in CNBC, that's interested in educating financial markets and keeping them up to date. I think that's what's going to be moving, because everybody knows, I think at this point, it's going to be 75 basis points. Obviously, if it's something other than that, that's what's going to lead the headlines. But I think the markets are going to be moving on what that terminal rate print is, because that's ultimately what I've been wanting to hear, is when Jerome Powell thinks that we're going to have that reversal, and that terminal rate is going to determine that. So that's kind of the most interesting part that I saw. Also, I've never seen Bitcoin compared to the Nasdaq. I have seen Bitcoin compared to the yen, the Japanese currency. And that was really interesting to see, because, it's like, it's been having the opposite story of the United States dollar, the Japanese currency has. It's been falling quite a bit, and so have all the other currencies pretty much globally, other than the United States dollar. So that was interesting to really see that chart for sure. What did you think?
Mine, I'm going to go back to, and speaking of the Dixie, I'm going to go back to the Dixie chart, our conversation there. We just got over 111, so, new highs on the Dixie here over the last couple of years. But when we're looking at it over the yields, and the fact that the smart money goes into the yields, and that normally these trade together. Normally you're going to see the Dixie and yields rise together. You're going to see them fall together. But today we actually see the yields down. We see the Dixie up. Is that potentially a sign of, this is just a little bit of a pump on that Dixie? People are kind of selling stuff, getting ready, because again, we talked about this before. It's not just Bitcoin. I think even people who trade stocks, and they're on Nasdaq, they're on an S&P 500, they are anticipating 75 basis points. They think the price of these recent dips have been baked in for the 75, and it's time to buy. And so now this is one more good fake out for all of those retail investors sitting on the sidelines. Because remember, he said smart money goes after the yields. The yields are falling. Smart money, and let's not go dumb money to the opposite. Let's call it smart money and retail investors. Smart money and retail investors do different things. Yep. I think smart money is preparing itself for a buying opportunity. I think that retail investors are looking at things happen. They're falling for little fake outs, and they're thinking that we're about to have some sort of dip. They're selling their positions. It's kind of sad, but that to me was really cool. Is even hearing I don't always follow the yields. So the fact that the yields are falling this morning, despite the fact that Dixie is hitting highs, is actually a good piece of information to keep going on as we move forward. Watching every time we see the Dixie rise, the real question is, let's go look at what the yields are doing. Let's see if the yields are rising as well, if that's confirmation. But let's go ahead and engage with some chat here. Just so you guys know, I don't know if we're going to be able to go back that far to see it. I did see in chat we had a new member, Nick West. So that is another green name that is going to be on every single day. Nick, thank you so much, and welcome to this amazing community. Were there any? I know we saw super chats earlier. Smay, do you have the list for us?
I have a list. Sweet. I'll read them.
I was waiting. Yeah.
We have one from Eric Wallen says, I've been buying Bitcoin every single day to DCA. I felt silly DCAing above 20K lately. Should I just save up daily for a big dip now instead of just buying daily? Not financial advice though, however.
Can you read? It's when they're longer, it's harder to hear.
Should you try to time the bottom, or should you DCA? The answer is DCA.
All right.
Should you time the bottom or DCA?
Yeah, I think unless you're, and you'll know if you are or not, unless you're an experienced trader, and even experienced traders like Magic Internet Money that we have on, timing the bottom is very, very difficult. He still buys in incrementally. You DCA.
I think the difference between good traders and bad traders is good traders understand it's impossible to time the bottom.
Well, to clarify his question, he's saying that he's been doing a daily DCA and he's been buying a lot above 20. Should he have just waited to do maybe a weekly or whatever to buy at lower levels?
Of course.
So
hindsight's 20/20.
You got to choose your strategy and stick with it. What was his name again?
Eric Wallen.
Eric, you got to stick to your strategy, whatever you choose. If you're going to choose the daily one, we talked about this before in a video I made a couple weeks ago. Make your plan and then stick to it. And if you're learning, if you feel like your plan's failing after a long period of time, then you can redo your plan. Obviously, not saying once you make a plan, you have to go down that plan for the rest of eternity. The point is, though, is that plan would have worked out if we just kept climbing. Like, you would have been very excited if we were sitting currently at 25,000 or 30,000 in that range. That was a great plan. We're not sitting there, so at the moment it looks like it's a bad plan. But unfortunately, I think a lot of people are going to be starting to plan, and they're going to stop purchasing any crypto until Bitcoin gets down to $9,000, $10,000, $11,000, and they're going to miss out on these golden opportunities because they're trying to time and see the exact bottom, and that just does not happen. I would say you could move to a strategy where you just have a price level, and what you do is you purchase every single day or once a week or whatever, as long as we're below that. When it gets above, you're kind of watching the market to decide if you want to keep bringing more stuff in. But either way, create a plan and stick to it. I don't know if that's what you were really asking, but TShroom's question, I'll go ahead and answer that one as well. If anyone was asking that, is it better to time the bottom or to DCA? It's DCA. It's DCA all the way because you're preparing and you're hedging yourself to create the lowest possible average price. And just so you guys know, my strategy, I have a $9,000 doomsday plan that I will make sure I have some dry powder sitting at 9,000. I might not end up spending it down there. In fact, I'm anticipating I won't. Yeah. But I'm planning for a doomsday. But I'm doing is I'm going to be purchasing at certain points all the way down to hedge and get the lowest average entry point. And that is what I call a good entry point, not a perfect entry point. Yeah. And you guys will learn the more you're in this space, you should eliminate the word perfect from your vocabulary when it comes to buying and selling. You should use the word good.
Yeah, you're not going to be using that. You're not going to be able to buy at 9,000. I'll tell you that right now. You're going to have to use that money to take me to Disney World. A Tim and TShroom.
I could afford
trip.
it. Yeah, man. That was something a little strong. That laugh was a little. The joke wasn't that.
What else we got, Smay?
All right, I would like to read some more super chats.
There we go.
Go for it.
We have, and try not to make this answer so long this time. Jeez. Anyways, we have from Elliot Locke says, speak on the ADA upgrade. Do you think it will be sell the news like ETH was, or a lighter note? Y'all a bunch of nuts. Had me in tears, monkeys.
I got a little aggressive. As far as ADA, here's.
Yeah, it's really kind of.
I hate saying this. There's three scenarios that are playing in my mind. Three possibilities. One is it comes, it's bullish, it brings a lot of attention to the space, and we shoot. Go to my screen real quick, Smay. I'm going to show them on the charts. The first scenario is we do not play out this descending triangle, and we end up going to the upside, right? That's the first scenario. I would love to see it. I don't think that's going to happen. The second scenario is we play out this descending triangle. There's a lot of pressure in the space, and we drop all the way down to 25.
Yeah.
I don't think that's going to happen. I actually, especially after talking with Paul, CVO, I actually think there's a very good likelihood. First of all, I think we rally it one more time. I think the entire market moves to the upside. But, of course, we set a lower high, and we start to play this role. And Cardano might take this thing all the way to the breakout point, which I got to move over and get there because I'm running out of space on my screen. But I think potentially after that, I think you could see potentially Cardano come back down. And I created some levels for you guys the other day. If I were to go, actually, let me go to my Kraken chart because that's where I put those levels. I think the levels to keep an eye on, not needing to use my marker, are going to be watching this 34-cent mark and this 30 mark on the daily chart. And if I use Lux Algo, I did this for you guys yesterday, but I'll show you once again just in case you missed it. Lux Algo has a sell order on Cardano saying the take profit should be around 30 cents. I'm not necessarily guaranteeing it gets that low, but the fact that I have Lux saying that, we're seeing the TA kind of say that, even the concept of this about to break, like tomorrow we should be seeing the Vasil hard fork actually launched. Why haven't we rallied already? Like, anticipation and hype precedes big events. We should be seeing it rally right now, which makes me believe that I'm not necessarily saying it's going to be a massive sell the news, but I don't think this was a buy anything either. I think Cardano is going to keep on chugging along until people get more interested in it. And trust me, I think that is coming down the road. But I think the most realistic scenarios of the three I gave, I don't think we're doing this. I don't think we're going all the way down to 25, 26 cents. I think that we probably are actually going to come down to around 34 cents at some point and then find our way back up. Now, whether or not it means that we actually do this first, I think this actually happens first before we come down to 34 cents. But I very easily could see that happening. And by the way, if Cardano goes 34 cents, I also could see along the same lines Ethereum continue to hang tight at currently where it is, if not go higher because of its fundamentals, and Bitcoin staying above the 17,600. I actually feel like this could be like a good clean out on Cardano down to 34 cents, and then it start to rally. Here's the thing about Cardano, was my last point, and I know this was a long answer, and Smay hates that, but Cardano is, all of you who love Cardano and have been following it and trading it, you know this. Cardano has a way of breaking your heart at one point, and then when you just feel like, oh, Cardano's not doing well, it just shoots up out of nowhere. Bang. And the other points where it's just making your whole world, you think it's unstoppable, and then it takes a massive dip. That is the history of Cardano, and I don't know if that's going to change anytime soon.
Yep. Okay, I'm going to read the next one.
But that's just price action. The fundamentals, the project itself is great. I'm talking about traders and price action. The price action on Cardano is crazy.
Can I?
Go ahead, Smay.
All right, I'm gonna read chats now. I'm just making sure he doesn't. All right. This one sounds like it's probably a shill, but I'm just gonna read it anyways because he paid for the ad, you know. So we have Satoshi Morpheus says, OAX been around since 2017, 10 million market cap, 100 million supply potential, 70% burn, and to go to $5 currently at 29 cents.
Yeah.
Woo!
There you go.
Guys, definitely don't buy into that because it's a shill. So,
I mean, it could be legit, but just do your own research. I don't know.
Yeah.
Statistically,
we're not going to recommend it by any means.
Yeah, statistically, you know.
OAX.
Right. What else we got?
Well, that's it.
That was it? Oh, okay, good. Yeah. Well, I didn't know. I didn't know if you were just rushing my answers because we had a plethora of questions.
Oh, no. My favorite thing is to hear you speak. So, and today's opposite day. So.
Dang.
Wow. Shots fired.
Rough ski.
Good stuff, man.
Big rough ski.
Goodness. Well, here's the thing. We're about to wrap up today's stream. Make sure to join us at 2. I have other thoughts on the market, but I'm going to save them for 2 p.m. because, again, it will all change when we finally get those numbers and we hear from Jerome Powell. So make sure to wrap out this stream. Join us at 2 p.m. for that live. First of all, our live reaction to the basis point increase, and then our live reaction to Jerome Powell's press conference. Make sure to tune in tomorrow. We got a special day tomorrow. Nick Dye, the crypto keeper, is in town, and he will be on set in the studio with us. You don't want to miss that. Make sure you stick in and tune in for that as well. Stop. Okay.
All right.
I'm excited for Nick Dye. That's going to be so fun.
I was expressing my excitement to have Nick Dye on set.
I'm trying to wrap out this show really nice and clean, Smay, and you are just.
What did I do?
Do you know exactly
what you did?
Stop.
You are not an innocent bystander in this.
Stop. I didn't do anything.
Everybody, if you enjoyed this show, smash that like button and subscribe for more content just like this. Depending on if you like, I don't know. We'll see how much content like this necessarily goes on. Either way, we're going to have a great show here from here on out, and you guys are the reason why, because we are all about the community and about uplifting and engaging, because this is not a one-person journey. This is all of us coming together to learn and grow together. If that's something you love, make sure you join our team. Become a subscriber, become a member, whatever you're able to do. We love you guys, and we'll see you at 2 p.m. With that being said, though, peace.
Oh, I got a real good feeling.